Hello and welcome to the Mint Mark to Market show. The Mint Mark to Market column analyzes stocks, financial markets and the economy. I am Clifford Alvarez and today I'm going to talk to you about the stock markets. In fact, the good news is that the stock markets are at a dizzying high, as we all know. But the bad news is that the economy is at a 7-quarter low, which has been declining for the last 1.5 years, even more than that. The other bad news is that the valuations are soaring because the stock markets are running away too high. In fact, the stock valuations of the BSE Sensex stands at around 19.3 times 1 year forward earnings as estimated by Bloomberg. And back in March 2019, this valuation was at about 19.7 times. So there's hardly any gap between the valuations now and the valuations then. And so that's a worrying sign because it shows that there may be limited room for the markets to go up from here unless liquidity continues to sustain. That's point number one. The good thing is that liquidity has been strong. Global liquidity is quite high. There are negative rates in quite a few countries and interest rates across the globe have come down quite a lot. So there is a slosh of liquidity flowing in the global markets. Foreign investors in that regard have poured in 22,000 crores in the last 2 months after the tax cuts have been announced. In fact, the good thing also is that the surcharge on foreign investors have been removed. So they have once again started to invest in the Indian stock markets. Now all this has culminated in the fact that the market is rising, but there seems to be no fundamental backing to the market in terms of earnings growth. Now the big question is when will this earnings growth come back? Earnings growth will be slow and gradual. It's not going to come in a hurry. In fact, over the last 4-5 quarters, analysts have been penciling in a huge earnings growth which have always fallen short of expectations. And the same trend is likely to continue. Besides a slow growing GDP, it actually means that bigger companies only will be able to grow their earnings, while the mid and small caps will find it far difficult to see an earnings revival as such. Thankfully, the GDP will make a lower base now, and over the next 1 year we will see a higher GDP on that account. The slow and gradual recovery is not helping much. It will weigh on valuations at some point in time. Unless this liquidity flow sustains into the market, things are looking a little bit stretched from the market's perspective. Also, this dichotomy between the larger companies and the smaller companies may continue. We are seeing investors moving away from smaller to larger companies. Now, the disconnect between the markets and the economy has sort of widened lately. If the markets have to sustain at these levels, then hopefully sooner or later we see a GDP revival. Thank you.